Despite a promising drop in mortgage rates, a new report from Moody's suggests that an anticipated interest rate cut won't be a cure-all for the housing crisis. Last week, we saw disappointing job figures and a global stock market plunge. But on a positive note, mortgage rates have recently dipped to their lowest since February. With the Federal Reserve likely to lower rates in September, homebuyers and those looking to refinance might be in for some relief. However, this move alone won't address the deeper issues in the housing market. Moody's economist Nick Villa warns that even with a potential rate cut, the housing crisis is far from resolved. The current economic volatility means that while lower mortgage rates are helpful, rising unemployment could make it difficult for people to buy homes. Furthermore, mortgage rates have not yet reached the ideal level of around 6% that might encourage more buyers to re-enter the market. Villa points out that although the bond market anticipates a rate cut, this adjustment alone may not be sufficient to balance the housing market. The average rate for a 30-year fixed mortgage is closely tied to the yields on 10-year Treasury bonds, which have recently fallen. Yet this decrease might not significantly impact the housing market until rates fall further, potentially below 5.25%. The Fed's rate hikes over the past 2 years have driven mortgage rates up, peaking at over 8% last October. While recent rates have dropped to a 52-week low, they're still not low enough to counteract the high home prices that have been climbing steadily. Villa notes that despite lower rates, home prices remain high, and the cost of renting has only recently started to exceed homeownership costs after years of the opposite. The primary issue, according to Villa, is the long-standing housing supply shortage exacerbated by a lack of new construction. The housing market is still experiencing a shortfall of nearly 1.9 million homes due to years of underbuilding. While the current supply situation is better than in January 2022, more needs to be done. In summary, while a Federal Reserve rate cut might offer some relief, it's not a panacea for the nation's housing affordability crisis. The key to solving this issue lies in increasing the housing supply to meet demand. That's the latest from Small Business Pulse. Stay tuned for more updates on the economy and your business. I'm Mia Chan, and we'll see you next time.